Hello, everyone. My name is Rahema Kabuga. I'm the Director for Synod Relations with Lutheran Church Extension Fund. Thank you so much for joining us today as part of our webinar series as we take a look at who LCEF is and then focusing in on our rostered church workers and our mortgage program. Today, I'm so excited to be joined by Kim Hovey, who is a realtor here in the St. Louis area. I'm going to tell you a little bit more about her in just a moment, but I wanted to share with you a few things before we begin. Throughout this webinar, you will be muted. If you have any questions, please feel free to drop that in the chat feature. Please know that this is being recorded, and so we will share this recording and it'll be available online for you to view approximately 7 to 10 days after this final webinar. So we are so excited to be with you. Before we start, let's begin with a word of prayer. Heavenly Father, I thank and praise you for your bountiful goodness. Thank you for the gift of life that you have given us. May we live it to the fullest, praising you in all that we say or do. I thank you for the ministry of Lutheran Church Extension Fund. And Lord, I ask that you would bless those that we are humbled to partner with in ministry. I thank you for our speaker, Kim, and ask that you would bless her words for those who hear it, that they would grow in knowledge and strength in this area. Be with us the rest of this day, and all that we do be to your glory. All this I pray in your name. Amen. So as we dig into this, part of the reason why we do this is if you are not aware, one of the things that LCF is best known for is its lending. This is often for churches, schools, and ministries. So I go out and I often hear, oh yeah, LCF helped my church, or they helped my school add a new building, redo a new building, or build something from scratch. But we are blessed as a part of the Lutheran Church Missouri Synod to serve her workers. So if you are a rostered church worker with the LCMS, you qualify to be part of our home mortgage team and program, and that is a wonderful opportunity for you. The reason why is because we get to do ministry through the lens of Christ. And it is through that we get to offer low-cost loans for our roster church workers. It's also a wonderful opportunity because you get to use your call documents as a way of collateral for your upcoming home loan. And so we get to work with each individual and family to help them in very unique ways. So I wanted to share that with you, and we'll talk a little bit about that at the end. But what we're going to talk to you today is really applicable to anybody who is looking to purchase a home, whether it's for the first time or maybe they've rented for a while and are doing now finding a home, or maybe you're even refinancing, whatever the case might be. This is going to be for everyone. So I'm going to turn it over to Kim, but before I do, I'd like to give you a little bit of information about Kim. With 20 plus years of experience, full-time real estate agent Kim Hovey serves buyers and sellers in the greater St. Louis area with an unwavering commitment to exceed expectations. Kim leads the Kim Hovey team, which includes Stacy Felser and Noelle Brazy. And together, this trio provides superior service, excellent communication, and keen attention to details, empowering them to give their clients a customized experience and deliver on real estate goals. Kim's dedication and hard work has earned her a membership into the Coldwell Banker International President's Elite, an honor reserved for just the top 3% of agents globally. As a resident of the St. Louis area for 38 years, Kim has deep local market knowledge. She listens attentively to understand a buyer's need and to find a home that meets their criteria. Kim's marketing expertise and creative eye for staging ensure a seller's home will outshine the competition and secure optimal return on investment. Kim has also earned several important industry certifications to better serve all of her clients, including buyer's agent, relocation specialist, and professional home property stager. Many of Kim's 5-star reviews cite her knowledge, experience, and responsiveness, as well as her principled integrity and how easy she is to work with. The Kim Hovey team offers buyers and sellers a unique real estate experience with individualized service and support every step of the way. Kim, thank you so much for joining. Another fun fact is that you and I attend the same
We
church, and
do.
we're joined in Christ as sisters there. And so I'm so excited that you could join us today and share a
Oh,
little bit of
thank
your
you.
knowledge.
Thank you. Thank you for inviting me.
Of
This
course.
is an honor to be with all of you today and share some information that hopefully will be helpful to the church workers that might be considering buying a home. Happy Lutheran Schools Week to all the church workers
Yeah.
that help our young children learn about Christ and grow in their education too. And I have had the privilege of working with the LCEF on many occasions for pastors that have come into the LCMS or other church workers who have come into uh, positions with churches around the area. I have been a realtor, as you said, for well 23 plus years now, and it's been such a blessing. I've loved my career and I love sharing my knowledge with everyone. So we're going to talk about buying a
Mhm.
home today, and I'm going to give you just an overview and remind you that I am licensed in Missouri. So if you are watching from another state, some of the information might be a little different. So you always want to consult with a realtor in your area. And if you need referrals for that, I can be part of helping you find someone in your marketplace. But when it comes to buying a home, that's the most exciting thing that anybody could do, whether it's your first home or your last. A home is where we have all of our joys, all of our sorrows, our haven. And so the decision to buy a home should be one that is seriously considered and looking at the reasons why you want to buy a home. Is it because you have been leasing and now you're ready to have your money go to work for you and earn some equity? Is it because you see yourself in being that job position for some length of time? Most people, I think, stay in a home, they say statistically 5 to 7 years. We've seen people stay longer. But if you feel you're going to be in a home in your area for at least 5 years, it definitely makes sense to buy instead of lease. And we're going to touch on a little bit later about the market. There's a lot of questions about our real estate market. When interest rates hiked up a few months ago and buyers got scared about buying, but I think whatever you read and whoever you listen to, they will probably give you the advice that you should not really base your decision on buying about what the real estate market's doing because it's so hard to forecast. Are prices going to go down? Are we at the bottom? Are we at the top? Trying to time all that, and then interest rates too, and where they're going is the challenge. So you make the decision based on where you're at in your life and when you're ready to make that investment, and one that I would encourage everyone to do rather than renting if you can. And of course, life changes. Is your family growing? Are we downsizing? Do we not need the same size home? Do we want something different? All those are reasons to buy. Um, so we are going to get into a little bit of an overview of the home buying process. And there's really four components that we're going to touch on. And I'm going to, at the first part, give an overview of what that process looks like, and then dig into each step, maybe a little bit more detail. So the first step of buying is to talk to your lender. And we hope that's LCEF, right? They do a fantastic job. And what they do offer is, I guess you guys don't charge private mortgage insurance.
Mm-hmm.
And
Mm-hmm.
so that is if you put less than 20% down, and I know you've gotten into this in other discussions, you don't pay an additional insurance premium because you put less than 20%. In fact, I read some statistics that most buyers put about 12% down on a home purchase. So um, you want to talk to your lender and look at your financial picture and make sure that what your income is can support, what dollar amount of mortgage does that support? And then what does that look like as far as a loan amount goes and a dollar figure for buying? If you put 20% down, well, I'm sorry, if you're buying a $250,000 home, the National Association of Realtors says that most people are putting 30,000 down. But again, that can vary. It can be less than that. And of course, your mortgage payment and how much you can borrow is going to be reflected on, your income. So you'll want to talk to your lender and get a very good overview first and foremost of what you can afford before you even really start the process. You'll want to consult with a real estate agent as well at about that time. But I have often had buyers come to me with already a loan pre-approval already obtained. because they want to make sure they're ready to buy before they do that. And before you write an offer on a home, you need a pre-approval too. So that's where you're going to spend most of the time in digging into that financial part of it. The lenders do require a lot of documentation. So upfront, getting that all organized is helpful, because the sooner you have your documents all together, then you're ready to roll and start the process. So obtaining a pre-approval is the first step. And here is our step-by-step overview. Once you get the pre-approval, then you'll meet with your real estate agent to discuss your home wants and needs. And what I found is that oftentimes buyers start with, okay, I want all these, 8, 10 different things. And tell you that the reality is you kind of end up with maybe half of those things. And that's okay, because unless this is going to be your forever home, which most time it's not. I found that, and I love, this is what I love about my job, is helping people look outside the box. What are those main things we can't change about that property, and what things can we change? And if it's the 4 bedrooms you have to have, then of course that's a given. But some of the other things, that you might let go of, what those requirements are. But you'll want to discuss your home wants and needs, of course. And when I meet with buyers for the first time, what we do is set up a search within the multiple listings based on a general criteria. Most people I found are, when I've talked to, of course, pastors that say are working at the synod, they'll want to be within a 30-minute drive time. So we can set up a search based on that, based on lot size, bedrooms, baths, just the general criteria they know they have to have. And then we set a search up that buyers are given the listings automatically. I see the listings, and then we get to the business of starting to look, which is the fun part.
Yeah.
And I will say, as far as timing goes, oftentimes I'll have people come to me 6 months maybe before they need a home. And I'll always say that's never too soon, because sometimes it takes a while, especially people are relocating into an area where they're not familiar with just the different neighborhoods. It takes a while to get familiar with everything and have a real good sense of where they want to be and the type of home they want. So those generally, let's say if you want to close on a home in June, or be in a home by June 30th, you'll want to close at least in May, which means you probably would be a contract in April. So that's the way I back up from that timeline, is let's look at finding that home you want 60 days at the minimum before you want to be in the home. So sometimes, again, that means starting 2 or 3 months beforehand. So you want to get that process going sooner than later, because sometimes it takes a while to find the right home. I've worked with some people for 2 years when they haven't needed one. But what I found is most of the time, folks will decide within a couple months, So you'll select properties to view. We'll view them. We set appointments based on a buyer's schedule and our schedule. Of course, homes are available generally 7 days a week to show, and you'll generally look at them with your agent together, or some people view them at open houses to just get started. But let's just say this process goes along a couple months, and then you find the home that you love. So we write a contract, obviously, on an offer to purchase, and that's where your realtor will come into play even more so, because we'll look at comparable values, which I will say the last 2 years has been a challenge, because when we look at past sales, and that's always the question, is it worth what they're asking? And honestly, the answer is what a buyer is willing to pay is what it's worth. And in the market we'd seen, we'd had unprecedented situations where prices were selling. I mean, there'd be a house listed and people would offer 50,000 more. It was a very unique market that I hope, honestly, that we don't kind of go through again. But we'll look at comparable values. We'll help you as a realtor assess what we think it would appraise for. Because when you buy a home and you are getting a loan, the lender will do an appraisal of the property, and it will need to appraise at that price. So we'll look at that. We'll write the offer. We'll negotiate terms. Terms can be price, closing date, inclusions. Our contract is about an 8-page contract. I think most states are that way. And so we'll go through the contract together and talk about the components, because sometimes even in competition, it's not necessarily the price that gets the house the highest price. It might be the flexibility of a closing date, or not asking for too many items on a contract. So when I say that, I mean like inclusions, washers, dryers, refrigerators, that sort of thing. But as a realtor, I go through all of that and help a buyer understand what a contract should include and shouldn't. So let's just say we write the perfect offer, the contract's accepted. Um, then we get into this gray portion in the middle about the contingencies in a contract. And these are pretty standard. And we're going to talk later about some flexibility with contingencies because, again, I will say, and we're already starting to see this here in our market, there's competitive offers being written on homes that sometimes we need to remove contingencies. These are standard in the contract, but we have the ability to adjust them. For instance, inspections. Most contracts are contingent on a buyer having any and all inspections they want to have. Includes building, environmental, radon, termite, sewer lateral, gas. All these inspections. That happens right at the beginning. That is a buyer expense. So a buyer will pay for those, and that will sometimes be $1,000 or $1,500 depending on how many you have. So you'll want to understand that that is a buyer's expense. It's not required, but it's always suggested and very encouraged to have inspections because you don't know until a house is looked at thoroughly what the house might need to have done repaired wise and that sort of thing. While the inspections are being done, and that's happening within the first 10 days after contract, the lender we send them the contract, they start to work on the loan approval process. You're sending them all the information they need with W-2s or 1099s, documentation to show your income, your bank statements, that sort of thing. So you'll be working with the mortgage lender right at the beginning as well. Then they're doing their underwriting process. They're ordering the appraisal. You're obtaining homeowners insurance policy. It doesn't have to be paid for. That's paid at closing, but you're contacting your insurance carrier and getting that set up because they want to know the address and they have some information they need to get that policy written. Once we have the inspections, below that it talks about resolve any issues. And so there is a negotiation process that usually happens in a contingency on inspections where the buyer might ask the seller to fix that crack in the sewer line or mitigate for radon if you did a radon test and items like that. And that begins another negotiation period that's called the resolution period. So I walk you through all that. That's all part in the contract. There's a large paragraph that describes that process and what it looks like. So I can say there's been very few times when a contract's fallen apart because of the inability to agree. But there have been times, especially in the last couple of years, where the sellers have just said, no, I'm not doing anything because I have these other buyers that will buy it without. So we help you walk through that. But at the end of the day, the buyer has to be satisfied with the agreement and before we're moving forward in the contract. Okay. The lender is ordering the appraisal, and on contracts, we write a financing loan commitment date, which we generally put out about 30 days from the contract. And that means that the lender has underwritten, they've given you the clear to close, and they've done the appraisal, and the appraisals come back at value. So 30 days is about what the time frame a lender needs, and I've never had anything go beyond that. And so, and I've had very few appraisal issues either. Even when the market was so hot last year, when things were selling over, it was amazing how generally I think the appraisers were seeing this is the market we're in, and having the ability to be able to make sure it appraised at value. What is also happening through this process that we haven't really touched on too much yet is title insurance, and a title and survey contingency is part of a contract too. So obviously a property can't convey from me to you until we have clear title, until the title companies researched both the buyer, the seller, the property, make sure there's no liens, make sure that there's not a judgment that needs to be paid. And it's amazing what people have found, and sometimes it's even simple as a prior mortgage that wasn't released from a seller. And then they have to dig and do all the due diligence to get that all done. That's the title company's job. That's what they're paid for. And that is and then they issue a title insurance policy that covers the buyer from the time of closing back. So if they close in 6 months down the road, this is what title insurance is for. If 6 months down the road, somebody knocks on the door and says, I put windows in the house and I wasn't paid, the title company has to resolve that. It's not the buyer's responsibility because that was part of the process to make sure there's clear title. And then you have your funds that you've obtained for closing. You close on your new home and you move in. It's that simple. And it's fun. It really is. So, as a realtor, I am basically, we're a team. When we work with our buyers, we are walking them through this entire process. And this slide we're on now just talks about that. And I'm sure if you're in another market, it's generally, the same, is that we are your advocate, your trusted guide through the process of the transaction and getting you from the first meeting through closing and even beyond. Our service doesn't stop there. So we talked about the pre-approval, and again, that next slide about what the bank is going to need and income, assets, debts, and I know you get into that a little more with folks, but that is an overview of what the lender will need on the pre-approval. We talked again about the home search and what that looks like. A lot of times I'll have people that will send me links they found on Zillow or Coldwell Banker Homes of properties, but generally we're using the MLS and we are sending you those listings directly through there. And the nice thing about that is you get immediate alerts. So the multiple listings, where every realtor, every broker in the market is putting those listings first, and then they're fed out to the websites. Okay. And then I like this sheet because it's a home preference sheet, and I think it's important to write out if you're buying the house by yourself or with another partner, whoever's involved, to get your wants and needs on paper. And again, like I said, I found that can be flexible, but at least you know your priorities, right from the beginning. I found that I think most people are, if they have children, it's kind of the schools are the most important thing, or drive time to work. As far as making an offer goes, we look at a lot of factors about that, but at the end of the day, it's how much are you willing to pay on this home? Do we feel it's worth it based on what the neighborhood has sold for, of homes like it? We look at all of that information to deliver how much, or to determine how much it's worth. We call it a comparative market analysis, and we try to compare apples to apples, like 2 stories to 2 stories or ranches. But generally, it's a overview of the neighborhood, or at least the elementary school, and sometimes we go even broader by school district. At least that's how we tend to search here. And we'll look at what that home's priced at, and again, if there's other people writing the offer, which typically can happen, then it's a matter of typically going over asking, to get the house. So that just again determines that's dependent on how comfortable a person is and how aggressive they want to be on getting that. So then, like I said, closing on your home, that process we talked about, the home inspection, the title search. I don't think I need to go into that any further because I think we've pretty much covered that. The appraisal. And what happens if there is an appraisal contingency is that if the home doesn't appraise, let's just say, the buyer has the right to go back to the seller if we've got that contingency and say, seller, my home didn't appraise. This home didn't appraise. It is $10,000 less. We want to renegotiate the price. And if the seller doesn't, then you don't have to buy the house. You can still buy it. It just means you have to put more money into the purchase because the lender will base the loan on the appraisal or the price, whichever is the least. So if that appraisal is less than the purchase price, that's what they're going to base the loan amount on. So you just can make up the difference on your own. Like I said, we haven't had really any appraisal issues in the business I've written. So hopefully that isn't an issue when you go to buy. Then there's a final walkthrough. You want to try to do that pretty much right before closing. We like to go the day before, or at least hopefully when the seller's out. Sometimes things happen. Sometimes they take the ring door camera, or they've taken I've had people take their thermostats and replace them. Yeah, you'd be surprised. So then we have to get with the agent and try to keep everything satisfied. But generally, homes are left in great condition. You expect it to be the same as it was when you wrote the offer. There's closing costs. You'll talk to your lender and they can help you plan for closing costs. And I do that too, give my buyers an overview. I figure they want to budget about $5,000 to $6,000 for closing costs, including inspections when they purchase a home. And, we are a full service company. Even after closing, I've had clients come to me and say, oh, I need a copy of that inspection report that I had on my house 3 years ago. The great thing about how we work, we use an online storage site called Transaction Manager. So all of the documents are uploaded into a cloud storage that's secure, and you and I can access those even long after closing. So we're full service. Like I said, we go beyond you don't forget about us, and hopefully we don't forget you when the time comes for the need of another real estate transaction. So I think that's about it, Rahima.
Thank you so
You
much,
are
Kim.
so welcome.
That is great. I mean, just so much information. I don't even know.
Your head's spinning.
My head is spinning, but I love it. It is so great. I want to give, we have some people viewing it live right now, so I want to give them a chance if they have any questions. Sure. I will say I am starting this process. I have just met with my realtor and going through this, but I've learned a lot of things just listening to you. And I think the biggest is that you're a partner. So asking those questions, no question too big or small, I feel like. Yeah,
no, not at all.
That's great. For those people that are listening, before we do a few questions, she referred to working with Lutheran Church Extension Fund. I want to encourage you, earlier this week, we did a webinar with our LCEF team. And so I want to encourage you to take a look at that because it refers to some of those benefits that Kim talked about, obviously with the low interest. So as we talk about the market today, what do you see as, as you're dealing with other lenders, what is the interest rate that you're seeing right now?
The last one I saw for a fixed 30-year was 5.75.
Okay. And I can tell you in comparison right now, LCEF is at a 4 or a 4.5. So as you can see, we're trying to really bless our church workers. It's the reason why we're here is for them. And so we're trying to do that comparison. And then she mentioned earlier about no PMI, which does make a 2 to 3% difference on what you're having to save for. So it's those little kind of nuances that LCEF is able to offer. So I really want to encourage you to check out that other webinar to hear about the lending process specifically through LCEF. But I really appreciated everything that you shared that's really applicable no matter where you're living. So so that's great. So you referred to the market and it's had a lot of changes here recently. And I asked my realtor this exact question, regarding appraisal and getting an inspection. I feel like the biggest thing I heard during the 2020, 2021 years was people were just skipping it altogether. Would you recommend that?
They were skipping it altogether. And no, I'd never recommend it, but that's the way it became.
Yeah.
And it was a challenging thing. I'd often write in the contract that the buyer had the right to have inspections for their own information. And there is in our contract here in Missouri, there is a termination clause in the contract. You can terminate after your inspections too. Some people were still leaving that in, and some people were taking that out also. So really, you were buying that home pretty much blindly. You'd have your inspections, but you might find there needs to be some things. I will say, and I'm not a home inspector, but I've been on a lot of the
Hmm.
inspections, and so I want to define I'm not an inspector, but 9 out of 10 things are fixable
Hmm.
on a home. I mean, it does take money,
Hmm.
right? But in a market we've been in 21 and 22, especially, people had to be competitive. And the way to be competitive, if a seller's looking at 10 offers, they're going to take the cleanest one. I think that that's changed. Well, I know it's changed a lot. Our market is ticking up again for buyers that are, there's still low inventory. And see, that's what people,
Yeah.
we kept saying, interest rates go up and, oh, the market's going to fall. Well, it's really not,
Hmm.
because there's still a shortage of inventory, and that's across the country.
Yeah.
So to be competitive, you got to talk to your realtor, talk to me about, are we okay to take those things out of the
Hmm.
contract? And
Hmm.
what does that look like then? And how do we structure it to where you still feel like you have some knowledge about the home, but you're not, um, you know, you're not just in that for you're buying a basically a home that's going to need so much work that you don't
Yeah.
want to go through with it. There's ways to get out of a deal.
And I think that timeline that you were talking about was very helpful. So if I know this is the date that I want to move in,
Hmm.
it takes about 4 weeks, and that is true even with LCF as your lender. We need about 30 days
Hmm.
to finish out all of your paperwork, and then a couple of months sometimes, often to find that home. So
Hmm.
starting 6 months out is not too not
Not
too
too
crazy
early.
at all.
No.
Yeah, it's not too early at all. We often have a lot, and as you said, you work with a lot of pastors in particular, and they're a little bit different even compared to our roster church workers, our commission teachers, or our DCEs, or parish musicians or deaconesses, who they are not finding out where their first call is going to be till about 60 days before they could possibly be starting in their ministry. So, one of the things that I think that you shared earlier is getting that pre-approval before they even maybe come to a realtor. That's
Hmm.
okay, and
Oh, yeah.
probably even a good
Oh, yeah.
thing.
You bet.
Yeah,
You bet
yeah,
it is.
yeah.
Because that's where it starts. We don't know where to start on a price range of a search until you get the pre-approval
Mhm.
anyway. We can be kind of generally speaking,
Yeah.
and get that refined, but that needs to really happen early on. You
Yeah,
bet.
that's one of the things I've been trying to encourage our first year church workers, especially, is to start that pre approval with LCEF. That pre approval rate is good for up to 60 days. So that gives you plenty of time to do that. So then, yeah, when you walk into that first meeting with the realtor, you have everything ready to go and
Hmm.
you can start through that inventory. So
Right.
that is
Right.
great.
Right.
Okay, so I'm going to ask you one last
Sure.
question. What is the biggest tip that you would give to anyone who is purchasing their first home?
Okay. I think my first tip would be, obviously, hire a realtor.
Yes. Yes. Don't do it on your
Don't
own.
do it on your own. There's so much, and you want that representation.
Mhm.
But I think after that is just have fun with it and be open minded, about it. It's a lot when you haven't owned a home. People go online and read all kinds of things, and believe that, think they're an expert on knowing um, what it should go like. But I can tell you that the more flexibility you have, the better. The more open minded you are, and trust, work with someone you trust that's
Mhm.
going to help you look at, from their experience, is it going to be a good investment?
Yeah.
Because that's what it's going to be your home, but you want it to be a good investment too.
Yeah. Yeah.
But also, I think people can get too focused on these really specific things they think they need,
Mhm.
and at the end of the day, it's, where do you see yourself? Where can
Yeah.
you be happy?
Yeah.
So if you look at it that way.
I mean, what you just said really just describes ministry, right?
Yeah.
I'm a commissioned teacher, spend years learning how to teach and all of those things. And then when you get into the actual teaching or being a pastor or DC, ministry can be messy. And so
Mhm.
being able to roll with the punches
Mhm.
is equivalent in across the scale. So I
You
really
bet.
appreciate that tip. So for those of you who are listening with us live and registered for this event, I want to tell you what is the next steps. You'll be receiving a packet from LCEF as a thank you for joining us through this. It'll contain a few things that I want to note to you. The first is kind of a summarizing a little bit of what Kim said and what our RCW mortgage team shared, we will have our tips and tricks, a document here for you to take a look at, and also tells you where to reach us if you have questions or to start that pre-approval process. So I want to really highlight that for you. And in order to, have a home loan, you need to also make sure you're putting aside that money for that down payment. And so LCF has really been working hard to support the church and her workers through savings. So we recently started the Church Worker Steward account, which is a great place to save for your first home or for any other oopsies that may happen as you get into your first home. So we want to encourage you to do that. So you'll have some information about that. That will include an application to fill out, as well as an envelope to mail that back to. And as a special thank you, we are going to include a matching of up to $100 to open that Church Worker Steward account. So I want to encourage you to do that. If you're watching this recording after this has been posted, we want to encourage you to reach out to LCF and we can send you all of the same material. So as you're going to see here, as we wrap up our time together, these are all the ways that you can stay connected with LCEF. Our physical office is here in St. Louis, but I also want to encourage you to reach out to your district office. Your district vice president is your LCEF resource within your district as well. So they are a great place to start, as well as here in St. Louis. So we've got you covered no matter where you are. You can see our office hours listed there. And finally, whether you visit us at lcf.org or feel free to give our 800 number a call, there will always be someone here. They'll be able to walk you through that process and be that partner in ministry for whatever your needs are. Finally, share and like LCF on any social media. So we are on Facebook, Instagram, and Twitter, and I want to encourage you to follow us on any of those platforms and get connected. We have so many amazing stories of roster church workers that we've been blessed to help through this home loan process or whatever other ministry needs that they have. And so we love to share those stories, hopefully including yours. So I encourage you to do that. Thank you again so much for joining us as part of this LCF Loves You webinar series. We hope that this has really been a blessing to you as you begin the process, whether it's your first home or your last home, that we can be that partner in ministry with you. Thank you for all that you do to serve the church in whatever capacity, and we pray God's richest blessings to you the rest of the day and this week and forever in his ministry.